in journal entry, only one person can record at a time. So in subsidiary book, it divides the work. In cash book, you will record only the cash transaction, cash receipts, cash payment, that is cash coming in and cash going out. You will record only the cash transaction. First, you need to identify whether it is a receipt or payment. When you made a purchase, you are going to pay the money. So this is the payment. Hello everyone, I am Meghna from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 7 of Unit 1, subject Accounting. In the last session, we have discussed about ledger and the problems on ledger. So let us continue with the next concept, that is subsidiary book. In today's session, we are going to learn the introduction, meaning, objective, types of subsidiary books and problems on single column cash book. Single column cash book is one type of subsidiary book. So let's start. Subsidiary book. Subsidiary book or the special journals are the various books of original entry maintained under the modern system of accounting for recording first the various business transactions as when they taken place. The subsidiary books are called special journal, as each such book is maintained for recording special or specific transaction. That means subsidiary book is a book of original entry that we are going to record all the transaction for the first time. But in journal entry is also, journal book is also book of original entry. But subsidiary book means it is a modern method of maintaining the records. So here it helps to record all the transaction in a particular account. Like in journal entry, we'll record all the transaction in a single book, but in subsidiary book, we'll maintain a separate book for a particular or the specific transaction. So here you will record special or specific transaction. You will record only the specific transaction in particular book. It is also called special journal. Subsidiary book is also called as special journal. In normal journal book, you will record all the transaction in a single book. So it is difficult for the management, or it is difficult for them to identify a particular transaction when they are needed. So if the small business, they can identify the transaction, but the large business or the big organization, they cannot find the particular transaction whenever they want. So it is difficult for them to identify. So they came with the concept subsidiary book. In the subsidiary book, you will maintain a separate book or a specific book for particular transaction, like purchase, sales. They maintain a separate book to record the transaction. They record as and when they taken place. So soon after the transaction is over, you are going to record all the transaction in a specific book. That is called subsidiary book. Then the objective of subsidiary books are to simplify the recording of business transaction. So general journal is difficult to record the transaction. So you will record all the transaction in a one book. So it is difficult to identify. Subsidiary book simplify the recording business transaction. So it simplifies the work for them. Then to facilitate the classification of transaction according to their nature. It facilitates classification. So classification of transaction like purchase, sales, purchase return, sales return. It classify based on their nature. Purchase means it's a separate transaction. Sales is separate. Purchase return is separate. So it's classified based on their nature. Next, to make it easier to locate any transactions recorded in the books of original entry. So it helps them to locate a particular transaction. Like if you want only the purchase transaction for a particular month, means subsidiary book helps to locate a particular transaction, the detailed information for a particular transaction. Like in the month of January, how much they purchase. So it is easier to locate the particular transaction, the total purchase and the total sale for the month. So it is easy to locate any transaction. Next, to facilitate the division of accounting work among the number of clerks in recording transaction in the books of original entry. That means it helps, it facilitates division of accounting work. In journal entry, only one person can record at a time. So in subsidiary book, it divides the work. So division of work can be done in the subsidiary book. So it helps them to record easily. So faster work can be done. So it helps in dividing accounting work among the clerks. So it is easy to record as well as it is easy to verify. So when you have a more than one book, so they can verify twice or thrice. So it became easier and error can be reduced. So error can be reduced through subsidiary book. Next, to simplify posting of entry from the books of original entry to the ledger account. So in ledger, in the last session we have discussed about ledger. In ledger, for a particular account, you will prepare a ledger account and you will record all the transactions related to that account. For example, you are preparing a purchase account, means all the purchase transaction you will post in the purchase ledger. So subsidiary book gives the detailed information about a particular account. In purchase ledger, you need to record all the purchase transaction. So subsidiary book of a purchase, it gives the full information about the purchase only. So it is easy to record, to post them into ledger. Subsidiary book is help to post all the transaction into ledger. So these all are the objectives of subsidiary books. Next, types of subsidiary books. We have purchase book, sales book, purchase return, sales return, bills receivable, bills payable and journal proper. All the purchase transaction should be recorded in the purchase book and sales transaction should be recorded in the sales book. Purchase return and sales return will maintain a separate book for purchase return and sales return, as well as the purchase and sales. You are not going to mix with the purchase return, sales and sales return. And bills payable, the total bills payable as well as total bills receivable. Maintain a separate book for record all the payables and receivable. And journal proper. Journal proper means the transaction which you cannot record any of this book. Either you cannot record in the purchase, sales, purchase return, bills receivable and bills payable. That transaction should be recorded in the journal proper. These all are the types of subsidiary book. Next concept, cash book. Cash book is a book of original entry wherein all cash transaction, that is all receipts and payments of cash are recorded as and when they taken place. It is special journal or subsidiary book used for recording all the cash receipts and cash payment. This is the original entry. In cash book, you will record only the cash transaction, cash receipts, cash payment, that is cash coming in and cash going out. You will record only the cash transaction. In purchase book, you will record only the purchase transaction, either it may be a cash purchase or credit purchase. In sales, cash sales or credit sales. So, in the same way, in cash book, you will record only the cash transaction. No credit transaction should be recorded in cash book. Cash purchase or cash sales or cash coming in, cash going out. All the cash receipts and payment. You will record the cash receipts and payment in the cash book. Cash book is a book of original entry, as cash receipts and cash payments are not normally entered in any of other subsidiary book. That means in the types of subsidiary book, you will record only the purchase return, sales return and bills receivable, bills payable and journal proper. But you are not going to record the cash transaction. So only the cash transaction you will record in cash book. So it's a special journal. Here the types of cash book. We have three types of cash book: single column cash book, double column cash book and three column cash book. Here in single column cash book, you have only one column for the amount. To record the amount, you have only one column. In double column cash book, we have a two column. One is discount and another one is cash. In three column cash book, you have cash, bank as well as discount. So, one single column is only one column for amount. Two column means discount plus cash. Again three column cash, bank and discount. So, this all about types of cash book. Under that first single column cash book. A simple or single column cash book is a cash book which contains only one amount column. It contains only one amount column. That is an amount column only for cash on either sides. Like ordinary cash account, it is maintained by small business concern which generally do not allow or receive cash, discount and do not have any bank account. That means single column cash book is maintained by a small business concern. Generally, they do not allow discount and receive discount, and they do not give on a credit basis. They use single column cash book in their business. This is the format of single column cash book. Debit, credit, date is for to record the date, and particular is to record the party amount or for which to write the brief information about the transaction. You will write all the receipts number, LF, ledger folio, amount, again date, particular, voucher number, LF and amount. Here all the in the debit side you will write all the receipts. So here you will write the receipt number. In the credit side you will write all the payment. So you will write voucher number in the credit side. All the receipts in the debit side and all the payments in the credit side. Here you will record only the cash transaction. You will not consider the credit transaction. This is the format of simple or single column cash book. So let's do one simple problem on a single column cash book. Enter the following in Sri Ganesh Simple Cash Book 2009. April 1st, balance of cash in hand rupees 1500. April 8th, purchase goods for cash from X rupees 320. April 15th, sold goods for rupees 480 to Y for cash. Received commission 65, paid commission 55 and paid to Shantaram on account rupees 715. Paid salary to the office clerk 100 and paid rent rupees 60. So, before starting the problem, you need to identify the receipts and payment. So, it is easy to do the problem if you identify all the receipts and payment. So, here this is the balance brought down. Balance of cash in hand means balance brought down. Next, balance brought down should be right in the debit side of the cash book. Again, purchase. Purchase is receipt and payment. First, you need to identify whether it is a receipt or payment. When you made a purchase, you are going to pay the money. So, this is the payment. Next, sales. Sold goods to Y. Sales is a receipt. That means cash is coming in. So, this is the receipt. Received commission. Received commission is coming in. You are going to receive the commission. So, this is receipt. And paid commission. You are going to pay the commission. Cash is going out. So, this is the payment. Next, paid to Shantaram on account. That means you are going to pay Shantaram rupees 750. This is the payment. Next, paid salary to the office clerk. This is one transaction and office rent 60. So, both are payment. So, first you need to identify whether this is the payment or receipt. Then start posting or start doing the problem. So, first this is the format of simple cash book or single column cash book. Write the heading cash book cash book of Shri Ganesh. First, April 1st, balance of cash in hand 1500. So, balance brought down. April 1st to balance brought down rupees 1500. We don't have information about receipt number, so just leave it blank. Rupees 1500. This is over. Next, purchase goods for cash from X for rupees 320. So purchase, this is the payment. Here you will record all the receipts here and payment in the credit side. Purchase is a payment. Purchase is a payment. Write in the payment side. April 8th by X account rupees 320. April 8th by X account rupees 320. Write the narration. Being goods purchased rupees 320. Finished. Next, sold goods for 480 to Y for cash. That means cash sales to Y on April 15th. So write in the receipt side to Y account rupees 480. Date April 15th. April 15. April 15 to Y account rupees 480. Right, being goods sold. Being goods sold. Next, April 20th received commission rupees 65. Received commission is a receipt. Write in the receipt side April 20. Commission to commission 65. April 20 to commission to commission 65. Being commission received. Next, April 22, paid commission rupees 55. Paid commission, this is the payment. So write in the credit side, that is payment side, to by commission rupees 55. April 22, by commission, this is commission paid. Debit side you will write commission received. This is commission paid rupees 55, being commission paid. Being commission paid rupees 55. Next, paid to Shantaram on account rupees 715. That means payment to Shantaram. This is the payment. So write in the credit side April 28th by Shantaram account. April 28th by Shantaram account. By Shantaram account rupees 715. 715 being paid to Shantaram. Next, April 30th, paid salary to the office clerk. Paid salary to office clerk. Payment, so write in the credit side by salary account. April 30, by salary account, rupees 100 being salary paid to office clerk. Next, office rent, paid for office rent. So payment, write in the credit side by office rent account, rupees 60. April 30, by office rent account, office rent account, rupees 60 being office rent paid. So all the transaction we have recorded. Now make a total. The total of debit is 2045 and total of credit rupees 1250. So write total of credit is rupees 1250. Write whichever is higher. So 2045. Write both the side. 2045 and find the difference. 2045 minus 1250. Find the difference and write it as a by balance carry down. That should be balance carry down. The difference between 2045 and 1250 is 795. So write 795. April 30th. Then it should be brought down for the next month. To balance brought down 795. Same like ledger, you need to carry down and brought down the differences. So find the difference between the debit and credit. Which side you will get less? So write different amount in difference amount in the credit side as by balance carry down rupees 795. That should brought down for the next month. So this is all about simple cash book. So this is all about today's session. In the next session, we just continue with the another one problem and move on to the double column and triple column cash book. You do according to your syllabus, you don't have a double column cash book. You have a problems on 3 column cash book. So let's continue with the next session. Until then, keep watching. Thank you.